Shall we start? Last question we did, that was question number 20. Come to question number 21. Good question. I'll read the question first, then you tell me what to be done. Okay? You will solve the question first, or should I solve? You will solve. But first let me read the question. Shri Bala, employed in ABC Company Limited as a finance manager, gives you the list of perquisites, list of provided by the two for the entire financial year. Number 1, domestic servant was provided at the residence of Bala. Salary of domestic servant is 1500 per month. Keep quiet. The servant was engaged by him and the salary is reimbursed by the company. In case the company has employed the domestic servant, what is the value of the perquisite? I am not going to discuss this. You are supposed to, I am just reading. So what is to be done here? Come on, you tell me. Come on. Can you read and translate? Servant was by the employer. Which perquisite? Clause 4, 17, subsection 2, clause, right now, servant was provided by the employer. If Bala is a specified employee, then taxable. If not a specified employee, then provided. Now, if you don't read if you don't read the next line, no, your answer will be this, but this will be wrong. Why? See, salary of domestic servant is 1500 per month. The servant was. So servant was provided, meaning what? You keep your servant, will give the salary. That way the servant was provided. Meaning that we are not engaging a servant for you, you engage and we'll pay the salary. So if you read only this much, then your conclusion will be clause 3. But don't read only this much, read this also. The servant was, meaning your liability met by employer will be clause 4. Everyone understood? So how much was the salary? 1500 per month into how much is the benefit? 18,000 benefit, taxable. If Bala is a specified employee, then also taxable. Non-specified employee, then also taxable. Will you remember this? Everyone? Don't talk, Now, this second perquisite, this madam will, madam, what is your name? Wafa. So you are going to give me the answer of this second perquisite. Come on. Read the perquisite properly. Read loudly. So what is to be done, Wafa, for this? Your turn is also going to come. Don't worry. You and you. Wait. Only 500 is exempt. Which law book is saying that 500 exemption for this? 500, where did I teach 500 for this? If the school is owned and maintained by the employer, in that school, if the education is provided, then amount actually incurred by the employer, no. Reasonable cost of education. Amount actually incurred by the employer on this education will not be taxable. What will be taxable? Reasonable cost of education. So they have already told you that cost of such education for Aarti is computed. Is meaning reasonable cost of education they have given. For Aarti, reasonable cost of education is 900. And for Ashok, it is Aarti and Ashok are children. Aarti and Ashok are children of Bala. So employees' children getting education. Employees' children getting in a school which is owned and maintained by employer. Whatever reasonable cost of education is there, up to 1,000 rupees per month per child. 1,000 rupees, not 500. 1,000 rupees per month per child, it is exempt. So for Aarti, how much is the reasonable cost of education? 900, which is within the limit of 1,000, will be fully exempt. But for Ashok, it is more than 1,000. So what to be done here? Come on, tell me. Either 1,200 can be taxed fully or excess amount 200 can also be taxed. But no amount is recovered. That means recovery is nil. So for Ashok, entire 1,200 can be taxed or 200 can be taxed. Any one effect you are supposed to give. Both the effects are correct only. Yes or no? But for Aarti, nothing will be taxed. Why? Because the amount is within the limit of. But what if Ashok and Aarti both are brother and sister of Bala, not the children? Benefit will be reasonable cost of education only, which is correct. But now that benefit will be fully taxable. 1,000 rupees exemption will not be available. Why? Because 1,000 rupees exemption is available only if the education facility is provided in such type of school for only then 1,000 rupees exemption is available. Yes or no? But what if the education is provided to any other household member in such school? Then whatever reasonable cost of education is there, that entire amount will be fully taxable. Do you remember that? So for Aarti, come on, tell me, what perquisite is this? 17 subsection 2 clause 3. Clause 3. For Aarti, come on, tell me, how much will be taxable? Nil. For Ashok, how much is the benefit? 1,200. Full amount is taxable into 12. 14,400. Or alternatively, 1,200 minus 1,000. Exemption is 1,000, no? So 200 will be taxable for 12 months. That will be 2,400. Both the effects are correct. If you do this also, then also it is correct. And if you do this also, then also it is correct. But just provide a small note that you have taxed the full amount. Alternatively, excess can also be taxed. Or if you are taxing this amount, excess amount, then you are going to say that we have taxed the excess amount 2,400. Alternatively, full amount can also be taxed. Will you remember this? If this same education was provided in a school where the employer has some arrangements, then the treatment will remain same. School owned and maintained by employer, or a school where the employer has some arrangements, the treatment is same. But what if the benefit is provided in some other school? That is for children education allowance. We are not talking about allowance. We are talking about perquisite. In any other school which is not owned and maintained by the employer, or where the employer has no arrangements, if in any other school, if this benefit was given, then whatever amount actually spent by the employer will be the benefit, will be fully taxable. There you are not supposed to go and check the reasonable cost, because whatever amount spent will be reasonable only. Do you remember that? Hello? Sure? Sure, no? Revise the salary and come no tomorrow. Did you revise? You are not lying to me. You are lying to yourself. You all have brilliant marks in your test, huh? Seriously. And I told you before going that I'm going to ask the question from salary chapter also. So in the test 2, unit test 2, which was there, you had the question from salary also, you had the question from house property also. Forget about salary. You could not score in house property also. Are you going to pass in the exam like this? Say yes. Tomorrow I am going to take a Viva. Miss the lecture and 67 pages of salary you are going to write that entire notes twice. Miss the lecture, tomorrow's, and then you come. You cannot miss tomorrow's lecture because tomorrow your Vivas are there. And if you miss, by whatever reason, I don't know, you are going to write the entire salary chapter. 67 pages are there, no? Twice the entire chapter you will write. Till that time I will not allow you to sit in my lecture. Okay. So, what is to be done with this? The treatment is already given. 17 to 3. For Aarti, how much will be taxable? Nil. And for Ashok, 1200 can be fully taxable, or excess amount 200 can also be taxable. Okay. Next one. Employer has provided movable assets such as television, refrigerator, air conditioner at the provided movable asset at the residence, meaning permanently given to the employee, provided at residence for use. So can I say movable assets given for use? Which assets are given for use? TV, refrigerator, AC. Actual cost of these assets are? Can I say this is a perquisite under 17 subsection 2 clause 8? Use of movable asset. How much value will be taxable? 10% per annum of the actual cost. Do you have actual cost? Can you calculate 10%? It will be 11,000. And this 11,000 benefit will be taxable fully. Why? Because nothing is mentioned about the number of days use, number of months use. So we'll assume that they are provided for use for full year, and Bala has used them for full year. So full year's value 11,000 will be taxable. Understanding? So gift voucher worth 10,000. Gift voucher, cash or kind? Value is, so again 17 subsection 2 clause 8. Do you remember? Any gift in kind, value is more than 5,000. Up to 5,000 nothing is taxable. If the value is more than, what will you do? Either fully taxable or excess can also be taxable. So in this case, you can charge 10,000 also, then also your answer is correct. And you can charge 5,000 also, then also the answer is correct. And this gift was provided on marriage anniversary. So even if it is a marriage anniversary, what is to be done? Nothing is to be done. If the gift is provided by the employer, will always come under the head salary. Understanding? Yes or no? Now, telephone provided at residence. Telephone provided at residence of Shri Bala and bill aggregating to 25,000 paid by the, is it a telephone allowance or a telephone perquisite? Perquisite, sure. Why not allowance? This is not a fixed amount given on a regular basis to meet expense. telephone was given, whatever expenses are happening, after incurring those expenses are paid or reimbursed by the employer, meaning that this is a perquisite. And perquisite, where the telephone and mobile phone perquisite, fully exempt, because you don't know that out of this how much is official benefit and how much is personal benefit. So this will be fully exempt. Will you remember this? Will you remember this? Next one. Housing loan, 6% per annum. Employer is giving housing loan at 6% per annum. So actual rate charged by the employer is 6%. Amount outstanding as on 31st March 2025, meaning as on 31st March 25, meaning last year. Last year closing balance was how much? So this year opening balance will be 6 lakh, and Shri Bala pays 12,000 towards on. So can I say on 1st April he would have paid 12,000 out of 6 lakh, 12,000 paid. How much remaining? 5,88,000 will be outstanding as on last day of April. On that, how much interest benefit? See, lending rate of SBI is 10%. So SBI rate is 10%. Employer is charging how much? 6%. If you will calculate, you are a mad person. Today only we have done this. Interest benefit is not what interest the employer is charging. Interest benefit is difference between the reasonable rate and the rate charged by the employer. This 6% is the rate charged by the employer. And how much is the SBI's rate? That is the reasonable rate, no? So reasonable rate 10% minus the rate charged by the employer is 6%. 4% interest benefit. That 4% on how much? 5,88,000 into 1 by 12. That will be the interest benefit for April. How much? 1,000. Second month, 1st February. 1st February, 12,000 again will be paid. So the loan outstanding as on the last day of February will be 5,76,000. On that, again 4% for 1 month into 1 by 12. How much you are getting? Now next, 1st March, again 12,000 you will pay. So the loan outstanding will be 5,64,000. On that, again 4% interest benefit for March, 1 month. Yes or no? Sorry, April, May and June. My mistake. April, May and June. So April month, 1960. May month, 1920. June month, likewise you have to calculate till March. Will you be able to do it? And the total interest benefit for the entire year will be, and this will be taxable for the full year. Yes or no? So this 6-1 is also done. Compute the chargeable perquisite in the hands of Mr. Bala. So here it will be 20,880, no? 20,880. So in the first case, this 20,880, this is a perquisite under 17 to 8. Interest benefit. So in the first case, how much is taxable? 18,000. In the second case, either 14,400 or 2,400. Third case, either 10,000. Sorry, in the third case, 11,000. In the fourth case, either 10,000 or 5,000. Any one amount. Yes or no? And the fifth case, fully exempt. Taxable value will be nil. Sixth case, 20,880. In every case, what is the taxable amount? This taxable amount, if you are not able to calculate, how will you put this amount in the salary statement? So in your salary statement, you will have to calculate this amount and you will have to show this amount taxable under the head salary. And if you are not able to calculate these amounts, gone. Understanding? Question number 21, done. Sure. Come to question number 22. Come to question number. In 21, perquisites are tested. Write down besides question number 21. What concept? Perquisites. And in question number 22, do you remember 17 subsection 2 clause 6, sweat equity shares? So write down perquisite, sweat equity shares, perquisite dash sweat equity share. For that perquisite, this question is there. Okay. Should I read? Yes, no? You only solve, no? I will not read. Not more than 2 minutes, huh? Not more than 2 minutes. Reading and solving, both should be happening in 2 minutes. Done. You should get the answer by now. Very easy question. AB company allotted 1000 sweat equity shares to Sri Chand in June 2000 and so June 2025, 1000 shares are allotted. Okay, so this year 1000 shares are allotted. The shares were allotted at, so the company recovered 200 from the employee against a fair market value of, on the date of exercise of, by the allottee Sri Chand. The fair market value was computed in accordance with the method prescribed. Very good. So as on the date of exercise of option, how much was the value of the shares and how much was recovered? So how much is the difference? That is the benefit. And that benefit will happen for how many shares? Multiplied by 1000. So how much is the total benefit? That will be taxable in this year. Why? Because the shares are allotted in this year. Yes or no? So what is the perquisite value? 1 lakh. In case of subsequent sale of these shares by Sri Chand, what would be the cost of acquisition of these shares? 3 lakhs. How come? The fair market value of the shares as on the date of exercise of option, which is considered to calculate the perquisite value. Yes or no? That same fair market value will be treated as cost as per 49 2AA. Do you remember in the first session? In the first session today, I have already discussed this thing. But the numbers were different. Yes or no? So why 300 is taxable? Oh, sorry. Why 300 is taken as cost? Why? Because if you will not consider that 300 as cost, what will happen? The amount of 1 lakh which is already 100 rupees, which is already getting taxed right now, under the head salary as your perquisite will they again be taxed as your capital gain. So you want to pay tax on this again under the head capital gains. So this should also be treated as your cost, and 200 rupees cost is also your cost. So how much is your cost? 100 plus 200 is nothing but 300, which is nothing but the fair market value. Done, sir? Done? 22 is done. Move on to the next question. Now, X Limited provides the following perquisites to the employees. Mr. Y. Accommodation taken on. Accommodation taken on Employer's owned accommodation or employer has taken on rent? So how much is the benefit of such type of accommodation? Actual rent paid by the employer or 10% of salary, whichever is lower. Yes or no? So accommodation taken on lease, how much employer is paying? 15,000 per month. 5,000 per month is recovered from the salary of Mr. Y. So for this salary, see, compute the value of perquisite chargeable to tax, assuming his salary for perquisite valuation is how much? So for perquisite valuation, meaning for valuation of accommodation perquisite, the salary should be taken as 10 lakhs. They have calculated this salary and they have given. If you remember, the salary for perquisite valuation will include everything except those 5 things. Today go home and read and only then you come tomorrow. Seriously I am telling you, I am getting angry on you all. You all are behaving as if you are studying for me. You are coming to the class for myself. You all should not be given food to eat for at least a week. And not drinking water also for a week. Eating everything, drinking everything, enjoying your life to the fullest. With your father's money, with your mother's money, you are spoiling the money of your parents. I am telling you, seriously I am telling you. No need to call yourself a student if you are not serious about your studies. Simple questions I am asking from the things which I have taught. You are not able to answer those questions. What should I expect from you all? You just come tomorrow without preparations. You will see the true colors of Umang sir tomorrow. And forget about missing the lectures. I am telling you, forget about tomorrow's lecture if you miss. I will make sure that you don't attend a single lecture of mine. To value the accommodation, I have already told you. If you remember, accommodation facility we have done. To value the accommodation, what we usually do? We check whether the employee is a non-government employee or a government employee. Government employee is there, then licensing fees will be given in the question, that will be taxable. If the employee is a non-government employee, then accommodation is owned by employer, taken on rent by the employer. If it is owned by the employer, then 10%, 7.5% or 5% of salary, depending on the population, where the population of the city where the accommodation is provided. If the accommodation is taken on rent, then don't check the population. Only 10% of salary or actual rent paid by the employer. Whichever is lower, that will be the benefit. But if you want to calculate 10%, 7.5% or 5% of salary, salary will include everything except 5 things. DA not in terms. Value of all other perquisites, employer's contribution to provident fund, then exempt portion of allowances, lump sum retirement benefits. Exclude these 5 things and take everything in the salary. Now that salary has to be taken on due basis for the period for which the accommodation was occupied. So for the period for which the employee has occupied the accommodation, for that period whatever salary becomes due from all the employers except these 5 things, that salary 10%, 7.5% or 5% of that salary you are supposed to take. That salary you are not supposed to calculate because they have calculated and given. If the examiner does not give you this, you will have to calculate that salary. and you will have to take 10%, 7.5% or 5% of that salary. Are you all understanding what is happening? Rocket science. Something which you are understanding, then at least give me the answers. So this 10 lakh rupees is the salary for what? Perquisite valuation, this perquisite valuation. So what are you going to take? 10% of 10 lakhs. That is 1 lakh, or actual rent paid by the employer. 15,000 into 12 months. 1.8 lakhs. So either 1 lakh or 1.8 lakhs. Whichever is lower. So whichever is lower, 1 lakh will be the benefit. Yes or no? But out of that 1 lakh, whatever amount recovered from the employee, how much is recovered? 5,000 into 12. 60,000. Yes or no? So the balance 40,000 will be taxable. Please check. If you read everything, if you study everything properly, nothing will be difficult for you. But if you will not do the revisions, then I am sorry to say that after May you are going to definitely appear for September. And after September definitely you are going to appear for January also. I am so sorry to say this. I should not be speaking all such things, because this is not something which I wish for you. But your actions are speaking louder than your words. You are saying that you have studied everything and you have come. You don't remember a single thing. And we have not learned all these things 2-3 years back. Recently only. How are you going to remember all such things before your exams? I'm just wondering about that. Next one, next perquisite. Furniture for which the hire charges paid by X Limited is 3,000 per month. No amount is recovered from the employee in respect of the same. So even the furniture is given for use. And furniture is owned by the employer or taken on rent by the employer. How did you come to know? Because the hire charges are paid by company, meaning the furniture is taken on rent. So for how many months the furniture is taken on rent and given for use? Nothing is mentioned. Then it is used for 12 months. Yes or no? So 12 into 3,000 will be 36,000. Entire 36,000 will be taxable. Entire 36,000 will be 12 months into 3,000. 36,000 will be taxable. Okay. A car of 1200 cc. Who is going to give me the answer for this? Yes. Very good. Very good. Very, very good. Excellent. Excellent. So, tell me one thing. Whose car is there? Company's car. Company has taken the car on rent or own car. So 10% per annum of the actual cost of that car plus the expenses. Who is meeting the expenses? Who is meeting the expenses? Employer. So car belongs to employer. Expenses are also met by employer. Two benefits are there. Use is also there and expense is also there. For use, 10% will be taxable, and for expense, the amount actually spent by the employer. Amount actually spent by the employer. Both the benefits will be taxable minus the recovery, if any. And this amount will be fully exempt if the car is used only for official purpose. This benefit will be fully taxable if the car is used only for personal. But in this case, the car is used partly official, partly personal. Forget about these two benefits, a flat amount will be taxable. And that flat amount will be 1800 per month because the engine capacity of the car is, And if any amount recovered for this car will be ignored because that flat amount will be taxable. 1,800. 1,000 and. But wait, if the driver is also provided by the employer, then 1,800 plus 900. 2,700. 2,000 into 12 months. 32. This will be taxable. But if the engine capacity of the car was 1600 cc or more than that, then 2,400 plus 900, 3,300 would have been taxed. Yes or no? Sure. Next one. A gift voucher of 10,000 on his birthday. Full 10,000 or 5,000. Anyone is correct. Yes or no? Sure. So please check the answers. 36,000 for furniture is already taxed. 40,000 is already taxed for accommodation. Then 32,400. Then 10,000. So the taxable value of perquisite for this year is 1,18,400. Okay. Now read these two lines. What these two lines are saying? They're talking about gift voucher. Alternatively, 5,000 can be taxed. But we have taxed the entire amount. Alternatively, 5,000 excess amount can also be taxed. Okay now? Now, come to the next question. Question number 24. 24. Okay. Mr. Goyal receives the following. Following what? Following? What is the meaning of emolument? Payments. Following payments during the previous year. Who is receiving? Mr. Goyal. Assessee is Mr. Goyal. So during this year, he is getting what? Basic salary. What are you going to do with this? Basic salary. He is going to get this basic salary from his employer. Taxable under the head salary. For how many months he is going to get this? For the full year, entire amount they have calculated and they have given. What are you going to do it? T for taxable. You will make a salary statement. In that salary statement, write down basic salary, outer column 4 lakh. That's it. Yes or no? Then dearness allowance, taxable. Commission, taxable. Entertainment allowance. But later on, deduction can also be taken under section 16 clause 2. But for that, he needs to be an employee of government. Is he a government employee? Given in the question. Where it is given? Last line. Mr. Goyal is a state government employee. So whatever entertainment allowance he is receiving, you are going to give two effects. First effect, fully taxable. Then, no, deduction. Don't call exemption as a deduction and deduction as an exemption. Both the things are different. I've told you in my first lecture only. Exemption and deduction are different things. Deduction is after including income in the computation, eliminating the income. That is known as deduction. And exemption means an income which is not included only in the total income. So if you are earning any income and that income is not going to go in your total income, that is exemption. But if some income is going in the computation of total income, out of that income is some income is reduced, that is known as deduction. So first you will include entertainment allowance and then you will exclude this entertainment allowance, meaning it is a deduction. Yes or no? 16 clause 2. How much deduction you are going to get? 3 deductions. Or A, B, C, whichever is lower. A, 1/5 of basic. So do you have basic? 1/5 of that? 80,000. 80,000 no? 2, actual entertainment allowance. How much? 40,000. Or C, maximum 5,000. Whichever is. So when you will calculate your gross taxable salary, from that you will take deduction under section 16 clause 2. That deduction will be 5,000. later on. But first you will have to charge full 40,000 under the head salaries. Will you remember this? Everyone? Next one. Medical expenses reimbursed. Now see, first of all I am telling you that this is taxable. We have to yet discuss about the medical reimbursement. Okay, no? So whenever we will discuss, you will come to know that this is taxable. Okay. Now professional tax paid. How much? For this entire 2000 you are going to get deduction under 16 clause 3. Understanding? But out of this 2000, 1000 was paid by your obligation met by employer. Do you remember? Your professional tax paid by employer, first it will be taxable as your perquisite. Clause number 4. And then for that you are going to get the deduction. So this 1000 which is paid by the employer is also included in this 2000. So when you will take the deduction of 2000, automatically this 1000 will be allowed. But first effect of 1000 you are supposed to give separately. First you will have to charge this 1000 as your perquisite under the head salary. So first effect, taxable under the head salary, and then take the deduction. So when you will take the deduction, you are not going to take the deduction of 1000 because you have paid 1000 rupees extra. How much total professional tax you have paid? 2000. So for that entire 2000 you are going to get the deduction, and that 2000 includes this 1000 also. Understanding? Mr. Goyal contributes 5000. Ayyo, this is provident fund question. So forget about this right now. 5000 towards recognized provident fund. I will discuss about this later on. He has no other income. Determine the income from salary. So he has no other income. Mr. Goyal contributes how much? 5000 to his. So from your salary you are contributing to your provident fund. From your salary you are contributing to your. This is not income coming to you. This is an investment made by you. This is not income coming to you. This is out of your salary. How much you are contributing? This is your investment in your provident fund. For that you get deduction under section 80C. So for this you are going to get deduction under 80C. So now tell me, you are supposed to determine the income from salary. So first thing, you will make the format. What will you write? Name of the assessee, status, individual, ROR, PAN, dash, previous year, assessment year, computation of taxable income under the head salary, particulars, rupees. Okay, first one, outer column 4 lakhs. Second one, outer column 1,50,000. Third one, outer column. Next one, entertainment allowance, outer column. But don't forget to take the deduction under 16 clause 2 later on. Yes or no? Then next one, medical expenses reimbursed, outer column 25,000. Professional tax paid by the employer on behalf of Mr. Goyal 1000. Okay, no? Total 4 lakh plus 1,50,000 plus 1 lakh plus 40 plus 25 plus 1,000. 7 lakh minus 7 lakh 16 will be your gross taxable salary. 7 lakh 16 will be, out of that are you going to get deductions? 16 clause 1A, standard deduction. Are you shifting out? Are you shifting out? So you'll have to solve this question by two ways. Whether you are shifting out or you are not shifting out. First of all, let's assume that you are shifting out, not following 115 BSc. Will you get standard deduction? How much? 50,000. Will you get entertainment allowance deduction? How much? 5,000. And will you get professional tax deduction? How much? 2,000. So 50,000 plus 5,000 plus 2,000, 57,000 deduction. Yes or no? So take the deduction 57,000 out of your gross taxable salary. What was your gross taxable salary? 7 lakh 16,000 was your gross taxable salary, and you have taken a deduction of 57,000. How much is the final amount? 6,59,000 will be your net taxable salary, meaning income under the head salary. Yes or no? Now, if you follow 115 BSE, meaning, see, there will be no change in taxability of any amount. Basic will be taxable, dearness allowance will be taxable, commission, entertainment allowance, medical expenses, everything, professional tax paid by the employer, 1,000 rupees, everything will be taxable. Yes or no? There will be no change. There will be, so your gross taxable salary will be 7,16,000 only. Yes or no? But now, since you are following what? 115 BSE, you will get 75,000 standard deduction. Entertainment allowance deduction you are not going to get. And you are not going to get any deduction for professional tax. So how much will be the total deduction? Reduce this. 6 lakh. And how much was there? 6 lakh? 59,000. If you don't follow 115 BSE, if you don't follow, your net taxable salary will be 6,59,000. And if you follow 115 BSE, if you follow 115 BSE, your net taxable salary will be 6,41,000. Everyone got this? See, 6,41,000 and 6,59,000. Since the question was silent, we have calculated in both the ways. Yes or no? Now, relief later on. Relief later on. Come to the practice questions. Practice questions, test your knowledge. Test your knowledge. What knowledge you are having. Question number 1 we have already done, no? HRA. You are writing, no? Marking, no? That what concept is there in that question. Because at the time of revising the stuff, you should be knowing that in this question, this concept is there. So if you have studied that concept and if you want to revise any question on that concept, you already have the markings. Yes or no? Question number 2. Have you done that? No. Later on. Question number 3. Different perquisites are there. I have already taught you many perquisites. Yes or no? Start. Wait, I will read this question. Wait. X is employed with AB Limited. X is employed with on a monthly salary of and an entertainment allowance and commission of 1,000 per month each. So he is getting entertainment allowance also 1,000 rupees per month and he is also getting commission of 1,000 rupees. Commission is fixed commission. 1,000 every month you are getting. This is a fixed commission. This is not a turnover commission. Yes or no? This is a fixed commission. Okay. So basic salary will also be taxable. Entertainment allowance will also be taxable. Commission will also be taxable. Yes or no? The company provides him following benefits. First one, company owned accommodation is provided to him in Delhi has a population of more than 40 lakhs. 50% HRA we are doing or accommodation. Accommodation perquisite. Accommodation is provided in a city where the population is more than 40 lakhs. So for that accommodation, how much value will be taxable? And why we are checking the population? Because the accommodation is owned by the employer. Employer is not taking the accommodation on rent. It is employer's owned accommodation. For owned accommodation, we check the city and we check the population. If the population is more than 40 lakhs, then for this accommodation, how much value will be taxable? 10% of your salary. 10% of your salary will include everything except those 5 things. On what basis? Due basis. For the period for which the accommodation was occupied. Yes or no? So tell me, furniture is also given with the accommodation. So value of furniture will also be added. And the furniture costing rupees 2,40,000, meaning the furniture is also owned by a employer. So whatever is the actual cost of that furniture, 10% of that, 10% per annum of that will be taxable. So 2,40,000 into 10%, 24,000. That 24,000 is the benefit per annum. Will be taxable only if you are using the furniture for full year. The furniture was provided on. So for furniture, will you charge the full year's value, 24,000, or only the value for 8 months? April, May, June, July, the furniture was not given, but from August to March, 8 months the furniture was given, no? So for 8 months, how much will be the value? 24,000 into 8 divided by 12. It will be 16,000. And for accommodation, how much value will be taxable? 10%. 10% of the salary. And salary will include everything except those 5 things. So will the salary include basic? Yes. Will the salary include entertainment allowance? Yes. All the allowances. But exempt portion of allowance you are not supposed to take. Taxable portion of allowance you are supposed to take. Entertainment allowance is taxable. So you will have to take it. Yes or no? Salary will include the commission also. So how much is your monthly salary? 25,000 plus 1,000 entertainment allowance plus 1,000 is commission. So 27,000 into 12. 3 lakh. Can I say this 3,24,000 is your salary which is becoming due in this year? Due in this year, and the accommodation is also occupied for the full year. If nothing is mentioned, then the accommodation is occupied for the full year, and for the full year, how much salary is becoming due? 3,24,000. 10% of that will be 32,400. So can I say 32,400 for the accommodation will be taxable? And for furniture, how much? 16,000. So how much will be the value? 48,400 will be the taxable value of this perquisite. Yes or no? Next one. A personal loan of rupees 5 lakh. On which date? 1st July 25. On which it charges interest at? Who charges this interest? Employer charges 6.75%. Yes or no? The entire loan is still outstanding. Assume SBI rate of interest 12.75. Interest benefit is 6%. How did I come to know? SBI rate minus the actual rate charged by the employer. So interest benefit is 6%. This interest benefit you have to apply on the loan amount outstanding every month, as on the last day. How much was the loan when the loan was taken? So for April, May and June, 3 months, no loan is there? No loan is. So no interest benefit. April, May and June. July month, how much loan is outstanding? Why? No repayment. August, 5 lakhs. Why? Then September, 5 lakhs. October, every month loan amount outstanding is same from July to March. From July to every month loan amount outstanding is 5 lakhs. On that interest benefit is 6%. So for every month you will calculate the same amount 9 times, or for 9 months you will calculate together. Calculate 5 lakh into 6% into 9 by 12. So 5 lakhs into 6% into 9 by 12 will give you 22,500. This will be taxable. Getting it or not? Next one. His son is allowed to use a important adjustment. Important adjustment. His son is allowed. Meaning you are an employee. Your son is there. Employer has given a motor car or motorcycle. So motorcycle, no. Only if the motorcycle is transferred. First they are saying that motorcycle is given for use. Motorcycle is given for. So for use of any movable asset, 10% per annum will be the benefit. So your son is using the motorcycle, meaning you are getting a benefit of 10% per annum of the actual cost of that motor car. See, that motorcycle. That motorcycle was purchased for. So actual cost of the motorcycle was 10% of that. That 6,000 will be the benefit if the motorcycle was used for the full year. Now this motorcycle was acquired by the company on. Since then, this motorcycle was given to you. Hello? So what the company did? What the company did? 1st May 2022. Motor cycle was purchased for 60,000. If nothing is mentioned, from this date, it was allowed to be given for use. Used by employee's son, meaning employee only. Yes or no? Now tell me, as on the 1st April of my previous year, this motorcycle is still with the employee. So, April month, the employee's son is using it. May month also he is using. June month also using. And this motorcycle is sold in this same year to the employees for how much? 30,000. And on what date it is sold? 1st of August. So can I say this year, 1st April 25 to 31st July 25. For this period, the motorcycle is still in use. So for 4 months, the benefit of use will arise. Hello? Because since the beginning, that motorcycle is with the employee. So, in the month of April, where is the motorcycle? With the employee. May, with the employee. June, July. Till that time it is not transferred. Till that time it is being used. So for 4 months, the benefit of use will arise. And that benefit will be how much? 60,000, which is the actual cost, multiplied by 10%, 6,000. But that 6,000 will not be taxable, because that 6,000 is per annum. We'll have to take the benefit of only 4 months. So 60,000 into 10% into 4 by 12. How much? 1,000 and 2,000. Sorry, my mistake. 2,000. 4 months, no? April, May, June, July. April, May, June and July. 4 months. When the motorcycle is sold? When the motorcycle is sold? Which August? 1st August, no? So till 31st it was in use. Till 31st it was in. And in the immediately next day, it was sold. For how much? So now the movable asset is transferred. Now the movable asset is. So the benefit of transfer of movable asset. Do you remember that? Will reduce the wear and tear. At what rate? 10% or 20%? 20% if motor car was there. Computer, laptop, electronic gadget, then 50%. Both WDV basis. Any other asset? For every completed year of use. For every completed year of. Can I say 1st May 22 to 1st May 23? 1st May 22 to 1st May 23? 1st May 24? 1st May 25? Yes or no? How many years? 1, 2, 3 completed year of use. After 3 completed year of use, on 1st of August 2025, it was sold to the employee. So wear and tear for how many years? 3 completed years. Yes or no? So here the value will be 2,000. This is for use of that motorcycle for first 4 months of the previous year. And on 1st August 2025, the motorcycle was sold. What was the actual cost? minus wear and tear. For how many years? 3 completed year of use. At what rate? What method? SLM. So 60,000 into 10%. For first year also 6,000. Second year also 6,000. Third year also 6,000. So 6,000 into 3. 18,000 will be reduced for wear and tear. Reduce. Value is more, selling price is less. Benefit is there or no benefit? Value is more. Selling price is only 30,000. Benefit will be there or no benefit? Benefit is there. How come? Employer is recovering only 30. But the value of the motorcycle is? The motorcycle whose value is 42 is given to you only for 30. Benefit is there. How much? 12,000. So this year, 2 benefits are there. Number 1, use of that motorcycle, and that same motorcycle in this year is sold to you at a concessional price. Expect these type of adjustments in the exams. These type of adjustments will come. Understanding or not? So how much is the benefit by using that motorcycle? 2,000. And how much is the benefit by transferring that motorcycle? 12,000. Understanding or not? How will you present this answer? Same way, I will tell you. Professional tax paid by Mr. X. How much? What will you go? What are you going to do? Take the deduction under 17 to 3. But wait, only if the assessee is shifting out. So what is the given in the compute the income from salary, assuming he is shifting out. Following 115 BSc, not following. So first of all, tell me what they are telling you to calculate. Name of the assessee. Status. Individual ROR. PAN dash. PAN dash. Previous year. Assessment year. Computation of taxable income under the head salary. Particulars. 2 columns for amount. Yes or no? Point number 1. Basic salary. 25,000 into outer column 3 lakhs. Second, entertainment allowance. 1,000 rupees per month into 12. Outer column 12,000. Third, commission. 1,000 per month into 12. Outer column 12,000. Yes or no? Next one. Rent free furnished accommodation. Rent free furnished accommodation. Underline. What will you write? Value of accommodation. In the bracket. 10% of salary. That is 10% of 3,24,000. Inner column 32,400. Next, add value of furniture. In the bracket, you will write down 2,40,000 into 10% into 8 by 12. First column 16,000. 32,400 plus 16,000. Outer column. Will you be able to present like this? Sure. Second, next one. After this perquisite, next one. So, taxable value of interest benefit. Taxable value of, in the bracket, 5 lakhs into, again a small bracket, 10%, sorry, 12.75% minus 6.75%. Net will be 6%. Yes or no? Into 9 by 12. Outer column 22,500. Yes or no? Are you understanding? Or you want me to write down? Will you be able to present this answer in this way? Next one. Next one. Use of motorcycle. Motorcycle given for use. You will write down motorcycle given for use. In the bracket 60,000 into 10% into 4 by 12. Outer column 2,000. Next line, next one. Transfer of ownership of the motorcycle by employer at concessional rate. Underline. Actual cost. Inner column. 60,000. Next line. Less wear and tear for 3 completed year of use. In the bracket you will write down 60,000 into 10% into 3. Yes or no? SLM basis, no? Then inner column 18,000. So 60,000 minus 18,000. In the first column do the total 42,000 less selling price recovered from Mr. X amounting to 30,000. So 42 minus 30, outer column 12,000. Will you be able to do it? Next one. No. Nothing. Now nothing is received. All the amounts are received. So basic salary on your calculator. Come on, fast. Basic salary 3 lakh. Basic salary 3 lakh. Entertainment allowance 12,000. 12,000 will be commission. Then 48,400 allowance. Then 22,500 will be interest benefit. Then 2,000 add and then again add 12,000. 4 lakh 8,900. 4 lakh 8,000 minus standard deduction 50,000. Entertainment allowance no deduction will be available. Why? Because the employee is not a government employee. Yes or no? Even though it is taxable, but no deduction will be allowed. You are supposed to give a note for that. Next one. Professional tax paid. How much? So 4 lakh 8,000 minus 52,000. 3 lakh 56,000. This is your net taxable salary. Salary under the head. Sorry, this is the income under the head salary. Let's check the final answer. 356,900. Are we getting that answer or not? Question number 2, no? 3. 3,56,900. Can you see question number 3? All the amounts we have done in the same manner. Understood or not? Sure. Should I move ahead? Perfect, no? Okay. Now after question number 3, come to question number 4. No, right now 4 will not be done. Question number 5. Now I want all of you to solve this question. Come on. You all do. No. Wait. In this question also there is a PF concept. Don't do question number 5. Huh? Start question number 6. A similar type of question we have already solved. Question number 20 if you remember. Gratuity, leave, salary and all. We did no? Similar type of question is there. Start solving fast. Wait. Pay attention. You are required to compute the income from? You are required to compute the income from? Compute the income from of Mr. Raja under. Now he retired on 31st December 2025 at the age of 60 after putting in 25 years and 9 months of service from a private company at Delhi. So he is not a government employee, he is a non-government employee. He is retiring in this year. So from April till December he is in employment, and on 31st December he is retiring. So on retirement he will get retirement benefits, but before retirement how much salary he was getting? 25,000. So can I say basic salary 25,000 into 12, no? Or 9? April to December. So how much is the basic salary? Come on, tell me. So 2,25,000 basic salary will be taxable? Yes or no? Yes or no? Next one. Then he is getting a house rent allowance of 6,000 per month. Now if you will calculate the exemption for this, you are a mad person, because he is under default tax regime, and under the default tax regime you don't get any exemption for HRA. Entire HRA is taxable. So 6,000 into 9, because HRA also he will get till his retirement only, no? So 54,000 HRA will be fully taxable. Yes or no? He paid rent of 6,500 per month during his tenure of service. So even if he has paid the rent, now he is not going to get any exemption. Understood? Understood? So now on retirement he was paid gratuity of how much? He was covered by Payment of Gratuity Act. He had not received any other gratuity at any point of time earlier other than this gratuity, meaning that under section 1010 full 20 lakh limit is still available. So tell me, A, actual gratuity received, how much? 3,50,000. B, maximum 20 lakhs. C, 15 by 26 into last drawn salary per month into number of years of service. And now the number of years of service will be 26 years. Why? Because 25 years and 9 months, 26th year will be taken as full year, because 26th year is more than 6 months. Yes or no? So 15 by 26 into last drawn salary, I have to take basic and DA. Basic and immediately preceding to the month of retirement. So retirement month is December. Immediately before that, in the month of November, what was the basic? 25,000. What was the DA? Nil, because no DA he is getting. Yes or no? So basic is 25,000, DA is nil. So what is the last drawn salary? 25,000. So 15 by 26 into 25,000 into 26 years. How much is that limit? 3 lakh. So 3,75,000 or 3,50,000 or 20 lakh, whichever is lower. So entire 3,50,000 will be exempted and the taxable gratuity will be nil. You can take the exemption of gratuity under the default tax regime, as well as you shift out. You can take the exemption of gratuity. Yes or no? Next one. Now he had accumulated leave, meaning leave credit of 15 days per annum. Meaning every year he was saving 15 days. So for how many years he will save? 25. So into 25. 375. Hello. Divide by 30. Divide by how many months? 12 point. Can I say 12.5 months is leave credit? 12.5 months is leave credit at the time of retirement. Now this 12.5 you have calculated based on 30 days leave allowed by employer. So what employer was allowing every year? 30. How many leaves he was taking? 15. How many leaves he was saving? 15. So 30 days into 25 is the total leave allowed. minus 15 days into 25 will be the total leave taken. Will be total leave taken. So you will get 15 days into 25, 225. Getting my point, everyone? What I am trying to tell you? What I am trying to tell you? Employer was giving how much leave? Employer's rule, how much leave? 30. How many years? 25 years. So, this will be 675. 750. Out of that, he is taking some leave and he is saving 15 days. 15 into 25. 15 into 25 will be how much? So 375 is saving out of 750. That means how much leave he is taking? This is as per employer's rule. As per employer's rule, 30 days was allowed. He is saving 15 days. So 15 days he is taking leave. Getting my point? For all the 25 years, the same thing is happening. 30 days allowed, 15 days taken, 15 days saved. 30 days allowed, 15 days taken, 15 days saved. Every year this is happening. As per IT rules, what is the maximum number of days? 30. So as per this also, the 15 days leave will be available. So leave credit as per IT rules, leave credit as per employer's rule will be same. So leave credit will be how much? That will be 12.5 only. So leave credit we have calculated. Now we have to calculate average salary. We have to calculate average salary of 10 months, including the month of retirement. Hello, including the month of. So in the month of December, this is the month of your retirement, you have to count December also. And immediately prior to December, 9 more months. So total is 10 months. So you will start counting from February. You start counting from, no, not from February, March. So March to December. What did I say? March to December. What was the basic? 25,000. What was the DA in terms? Nil. What was the turnover commission? Nil. Ayo. So what is the total salary? 2,50,000 divided by 10 will be 25,000. So average salary will be 25,000. Yes or no? So now tell me one thing. How much leave encashment you are getting? How much leave encashment you are getting? Out of that, some leave encashment will be exempt. How much? A. Actual amount 3,15,000. B. Maximum limit 25 lakhs. C. 10 months into average salary. Average salary is 25,000 only, no? So 10 into 25,000 will be 2,50,000. And C. Average salary 25,000 into leave credit. And how much is the leave credit? 12.5. So 12.5 into 25 will give you 3,12,500 or 2,50,000 or 25 lakhs or 3,15,000, whichever is lower. 2,50,000. So out of 3,15,000, 2,50,000 will be exempt. How much will be taxable? 60. So this 65,000 will be your taxable leave salary. Understanding? Now he is receiving 5,000 as what? Pension. Receiving 5,000 as on 1/2/2026 he commuted 60% of his pension and received 3 lakhs. What is the date of retirement? 31st December. So in the month of January, he received 5,000 monthly pension. In the month of January, he received 5,000. On 1st February and March also, February and March also, he was supposed to get 5,000. Yes or no? But on 1st February, he computed 60%. So will he get 5,000 in the month of February or only 40%? Out of 5,000 monthly pension, if he is commuting 60%, so how much is still uncommuted? 40%. So 5,000 into 40%, 2,000 is still uncommuted, which is going to receive for February and March. And for the month of January, he did not commute anything. So full 5,000 he received for January. Yes or no? February, March, 2 plus 2 plus 5. 9,000 will be uncommuted pension. Fully taxable. Is he receiving any commuted pension? 3 lakhs, no? Will it be exempt? Yes. Actual amount 3 lakhs or maximum 1/3 of fully commuted pension. Why 1/3, sir? Because he is also receiving gratuity. So an employee who is receiving gratuity, his commuted pension can be exempt up to maximum 1/3. 1/3 of fully commuted pension. 3 lakh is fully commuted, no? Or only 60%? So how much will be the fully commuted pension? 5 lakhs. Getting my point? 3 lakh divided by 60 into 100. 3 lakh divided by 60 into 100 will be 5 lakhs. So 5 lakh is the fully commuted pension. 1/3 of that. 1,66,667. So actual commuted pension is 3 lakhs. And 1/3 is 1,66,667. Whichever is lower. So what is the lower amount? 1,66,667. That will be exempt out of your 3 lakhs. How much will be taxable? 1,33,333. That is the taxable commuted pension. Everyone getting this? What is happening? Did you understand? Next one. The company presented him. Company means employer. Employer presented him gift voucher of rupees on his. Amount of gift voucher is not more than 5,000. Fully exempt. So for company, from company, whatever gift is received will be fully exempt. Because the value is not more than 5,000. And his colleagues also given him a mobile phone. First of all, who is giving the mobile phone? Employer. Colleagues is employer. So any gift which is not coming from employer is coming from others will go to IFOS. And in the IFOS head, it will be taxable only if the asset is a specified movable asset. And the value is more than 50,000. Value is more than 50,000. Check. Mobile phone is how much? No, sorry. Value is also 50,000. And the asset is mobile phone. Do you remember one note we have written? In the last question. What note? Asset is not a specified asset. And value is also not more than 50,000. So this will not be taxable under the head IFOS also. Yes or no? So have you calculated all the amounts? Please do the total. 4,86,333. This will be your gross taxable salary. This will be your gross taxable salary. Are you going to get any deduction out of this? Yes, standard deduction. How much? 75 or 50? Why 75,000? Default. Then 75,000 will be the standard deduction. Any other deduction? Entertainment allowance? Why? First of all, he is not a government employee, and second, he is following 115 BSA. Will he get any professional tax reduction? First of all, no professional tax is paid. And second, he is following 115 BSA. Understanding? So how much will be the final amount? 4,11,000. This is the taxable salary. Let's check the final amount. Question number 6. 4,11,333. Question number 6. Answer is done. Easy? Sure? Will you present this answer today at home? Same manner in which we have done the last question. Yes or no? Take one question as homework. I am giving you one question. Wait. Question number 6 was there, no? Don't take any question for homework, because I have to yet teach you 2-3 concepts, and then the balance part of salary will be finished tomorrow, and tomorrow we are going to start with the new chapter. But what are you going to do tomorrow? Revise and come. Attending the lecture is compulsory. And what if you don't come? Entire salary chapter you'll write 2 times. Okay. See you all tomorrow. Bye bye. I said bye bye.